I've been telling you this for a little while now, that in my opinion, that we've already started the early phases of hyperinflation. And every day that goes by, I'm more and more and more certain of it. More and more. And I don't think I need to wait until it hits 50% to say, oh, we're in hyperinflation. Because those numbers get massaged as well. Please take heed. Please take heed. Because once we get a full inversion, and we have gotten the inversion, this is not something that we're waiting for. I mean, the 2 and 10 year are so close. Maybe by the end of this week, maybe by the end of, in a month, maybe at the next FOMC meeting minutes, they raise it another 50 basis points. But it will invert, and all the other ones have already inverted. What are you waiting for? The time to get prepared is now. Food, water, energy, security, barterability, wealth preservation, community, and shelter. The time to get prepared is now. Russians are buying so much more gold amid the ruble's collapse, right? That is a fiat money collapse. I have lots of these bills in here. Here, that's the first one that I grabbed. $10 trillion Zimbabwe note. But how much is this piece of gold worth? A lot more than this, because this has absolutely zero purchasing power value. This maintains it. So, part of what we're looking at here, and I think it's actually kind of nice that the central bank has halted its own purchases, but that's because the demand from the citizens has gone through the roof. Now gold has become one of Russia's last safe havens to preserve their wealth. Russia's central bank is suspending purchases of gold from banks amid increased consumer demand. And Russians have sought gold as a way to preserve wealth as the ruble tumbles to historic lows. And what you have to ask yourself is, when do you want to be prepared? You don't want to be forced to buy it into a crisis, because I guarantee you it's taking an awful lot more rubles, and I should have pulled that up. I'm sorry I didn't. But I guarantee you it's taking an awful lot more rubles to buy 1 ounce of gold today than it did last year, than it did the year before, than it did 5 years ago, etc., etc. Although it's quite interesting when I'm listening to the talking heads on CNBC or Bloomberg, what they keep saying is, well, if the yield curve should invert, like it's something that might happen in the future. And even if you look at this from January, it says by the third quarter as it delivers rate hikes. And guess what? It already started inverting in January. So it's ridiculous that they say that it might be taking place, because that was the start. And how about if all of this is ending by the end of, I don't know, this month? In other words, let me show you what I'm talking about. Because another part of the yield curve just inverted on Friday. And it says it gets scary only if the trend continues. This is the continuation of the trend, people. If you aren't paying attention, well, I'm talking to them. I'm not talking to you right now. But if they aren't paying attention, or what is it that they're really trying to hide? Like, this is the first one. So on Friday, you had the 3-year yield go higher than the 5-year yield. Now, why would you pay more or accept less? That's a better way to say it. Why would you accept less to loan somebody money for 5 years? Are you not watching what's happening with inflation? Do you really think you're going to have anything left by the time, presuming you get those dollars back, that you actually get those dollars back? I don't know. But that's not the only one. My goodness. It's also the 5-year and the 10-year yield has just inverted. When we have a yield curve inversion, It has always led to a recession. This isn't going to be just a recession. This is going to be the final death knell because they have no tools. They're anchored at zero. Yes, they went up 0.25%, and maybe, and they probably will, well, they'll try to anyway, raise it 0.5% at their next meeting and maybe even the following meeting. But honestly, they can't do it. They can't do it, period, because it's going to crash the economy that is built on this mountain of debt. The founder of investment house PIMCO told the Financial Times that he believes inflation is approaching troubling levels. I agree. But the U.S. Central Bank will not be able to implement higher policy rates to contain it. And frankly, it wouldn't really contain it anyway, because again, this is a supply side issue, not a demand side issue. But I suspect you can't get above 2.5 to 3% before you crack the economy again. We've just gotten used to lower and lower rates, and anything much higher will break the housing market, which is a huge part in many places. 30% of the global GDP, or of the GDP of different countries, is based on housing and everything around that supports housing. Are we in a housing bubble? You think this can last? You think if it costs more on a mortgage, how many people really have cash to pay for a house? Not many. And that means they have to take out mortgages. And the higher the interest, the bigger the mortgage payment. But the prices of the houses are ridiculous now. So the affordability level for most people has gone away. This is in two different pieces. We're now hearing about the loss of credibility and the loss of confidence in the Federal Reserve's abilities to fight this inflation, to engineer the soft landing. I mean, he's on hopium. But that's all he's on, because history tells a very different story every time. And with inflation running as hot as it is, and they have not started to run off any of their balance sheet yet. And I'll be paying attention to that. We'll take a look at the balance sheet, because presumably they've stopped buying. But they might have stopped buying in one place and started buying in another place. Sneaky moves, but they do that all the time. They're experts. Anything to keep things hidden from the public, because they require public confidence. The market's already saying, nah, we're losing confidence in you, pal.